Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first weekly bullish scenario where we're looking for a bigger 5-wave impulsive structure to the upside, and inside the yellow wave 3 we're looking for a 5-wave green impulsive structure to the upside. The common target area for your green wave 4 is between the 0.382 and the 0.5 Fibonacci, taken from the low of 2 to the high of 3, giving you a target area between 57.5k and 53.3k. The 0.618 at 49.3k is an invalidation for this wave 4 and would increase the probabilities for the second bullish scenario on the chart right now, where we have a wave 1, 2, 3, looking for a wave 4 and then a final wave of 5 towards the upside. In this scenario, the common target area for this wave 4 between the 0.236 and the 0.5, but now taken from the low of this wave 2 to the high of your wave 3, giving you a target area between 62.3k and 49.3k, with the invalidation being the 0.618 at 43.5k. Preferably in this particular scenario, this corrective structure is not yet finished. The low over here has been made before the 0.382 fib time, and this fib time here on the chart is comparing wave 2 with wave 4, as it is taken from the start to the end of 2 to the end of wave 3, and it is very uncommon for wave structures to not at least have a relationship that goes past the 0.382. Therefore, preferably, you're looking for a bigger 3-wave structure, after which we then expect continuation of the trend in a wave 5. On the daily time frame, the bearish scenario that could lead to another low, or at least a continuation of this range, is a sideways 3-wave WXY, after which we expect continuation to the upside. Common target area for your wave X is between the 0.5 and the 886 Fibonacci, taken from the start to the end of this wave W, giving you a target area between 66.7k and 72.2k. Inside wave X, we're then looking for an expanding flat in an A, B and a wave C to the upside, an internal 5-wave structure, and you want to see this wave C end before hitting the 2 fib time. The 2 fib time is taken from the start of your wave A to the end of your wave B, comparing A plus B with wave C. The moment wave C continues moving towards the upside and only ends after the 2 fib time, it significantly reduces the probabilities that this structure to the upside is a wave C in an expanding flat. The second scenario that could lead to an extension of this range is a zigzag with a leading diagonal in a wave A, 3-wave move in a wave B, and then a 5-wave impulsive structure to the downside in a wave C, moving below the low at 56k. The common target area for your wave B is between the golden pocket and the 886 Fibonacci, taken from the start to the end of this wave A, giving you a target area between 67.2k and 71.9k. And as you can see here, the golden pocket has been hit on top of the 382, and we do prefer to end this wave B at least on top or after the 382 fib time, taken from the start to the end of wave A, comparing wave A with wave B. However, price at the moment for an internal 3-wave ABC to the upside in the green wave B is not yet high enough. The common target area for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the low to the high of A to the low of wave B, giving you a target area between 69.1k and 71.3k. The invalidation in this scenario is price taking out the high at 73.8k, and that is something that can happen with the most bullish scenario, where you're looking for a double 1-2, after which we expect impulsive continuation to the upside. In this scenario, the invalidation is the low of your wave 2, and preferably this second wave 1 here doesn't hit 69.1k, because if it does, this second lower degree wave 1 is going to be longer in price compared to your higher degree green wave 1, because what we're looking for is a 1, 2, 3, 4, 5 in green, and inside wave 3 in green, we then have the internal blue count 1, 2, 3, 4, 5, and a best case scenario is that the second wave 1 and second wave 2 are a little bit shorter in price and time. Now the blue wave 1 is already a bit longer in time compared to the green wave 1, but it is so far at least not longer in price. If we then go to the 4-hour time frame, an unfinished impulsive structure is this 5-wave move over here, where we then have a wave 1, 2, 1, 2, 3, 4, 5 inside this blue wave 3, looking for a wave 4 to the downside, after which we want to see one more push to the upside in a wave 5, reaching that weekly naked point of control, preferably as resistance at 69.1k. The common target area for your wave 4 is between the 236 and the 05 Fibonacci, taken from the low of 2 to the high of 3, giving you a target area between 65.9k and 64.1k, with the invalidation being the 618 at 63.3k. Inside this target area here, we do have an additional support area that is between 65.1k and 65.3k. An alternative bullish scenario is that your wave 5 here is finished after a 1, 2, 3, 4, 5 wave structure to the upside. And I say it is an alternative because of this wave 4 over here. Because if we want to end wave 5 over here, then this small final little push is likely your wave 5 to the upside, which means that your wave 4 had to end somewhere here in a WXY corrective structure within a W a flat, X a zigzag a family structure, and then a wave Y, likely in some form of a triangle. However, if we pull a trend-based subextension from the start of W to the end of W to the end of your wave X and toggle on the 0.618, which is usually a minimum target for a wave Y, then what you will see is that even the low over here did not touch the 0.618, decreasing the probabilities that this structure over here is part of a wave Y in a bigger WXY structure, which therefore increases the probabilities for price to still move towards the downside, at least taking out the low over here and moving to 66.1k, but it also increases the probabilities for this scenario here, where we have a double 1-2 to start with, ending wave 3 at this high instead of labeling this a wave X, and then look for a 3-wave structure down in 4 and one more push to the upside in a wave 5. On the 3-minute time frame, we had continuously bearish CVD divergences as price has been moving towards the downside. Every bounce so far has been met with a small 3-minute bearish CVD divergences, increasing the probabilities for price to move towards the downside. We also have some bullish CVD divergences on the chart, as you can see, but the moment then price moved towards the upside, it was countered with bearish CVD divergences, and in a local trend to the downside, this is very relevant indeed. And price has also now hit the local 886 Fibonacci, taken from this low to the high, with the lows over here increasing the probabilities that sooner or later this low will be taken. So if we then go to the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher to still look for upside in a wave of 4 and at least another push to the upside in a wave 5. On the 4-hour time frame here, currently the probabilities are highest for a wave 5 to not yet be finished. In other words, still looking for a bigger move towards the upside, where the probabilities are higher for this impulsive scenario compared to an impulsive scenario where your wave 5 is already finished. Locally, on the 15-minute time frame, the probabilities are higher to at least take that local low, and then we'll take it from there. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.